Welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. Eli, we've got quite a packed session ahead, from Bitcoin's $100 million trade plans to what the Fed's liquidity injections mean for asset prices. Let's dive in.
Thanks, Maya. We're looking at a fascinating mix of macro narratives and technical setups. Let's start with Bitcoin. A trader recently claimed massive success with a $35 million trade and is eyeing a new $100 million position. He's watching $82,000 as a key exit level. That tells me he sees a strong floor forming around that level.
Let's take a closer look at the technicals. We're analyzing Bitcoin Tether on the weekly chart using Fibonacci retracement. What's the story here?
Bitcoin is consolidating near its 0.000 swing low at 83,860. It's been bouncing between that and the 23.6% retracement at $93,474. A weekly close below 83,860 could trigger deeper retracements. But for now, bulls are defending that critical zone.
And what about the momentum side? Are we seeing any exhaustion in selling pressure?
Absolutely. Weekly relative strength index sits at 37.19, oversold but not extreme. Meanwhile, moving average convergence-divergence remains bearish, though the histogram is slightly less negative, suggesting momentum is decelerating. It's a classic sign of potential trend fatigue.
Turn into stocks. We're also tracking NVIDIA, which has been a powerhouse lately. What's the 4-hour trend telling us?
NVIDIA is showing signs of consolidation. Recent candles formed lower highs and lower lows, suggesting a pause in the uptrend. Volume spiked on December 4th, but has since declined, pointing to a lack of conviction. Traders are watching support around $181.15.
Interesting. Let's shift gears to broader market themes. One headline asks, what went wrong with capitalism? A philosophical but timely question. What's your take?
It's less about capitalism breaking and more about adaptation. Since 2008, we haven't seen a clear new model emerge. The rise of democratic socialism, stagnant wages, and entrenched incumbencies all point to a system in search of renewal. The Fed's liquidity injections may fuel asset bubbles, but they don't solve structural inequality.
Speaking of liquidity, let's unpack the Fed angle. They're pivoting from QT to easier monetary policy. What does that mean for markets?
Think of it as fuel for the everything bubble. Easy money drives capital into risk assets, tech, crypto, even speculative plays. But it also risks inflation and creates systemic fragility. It's a double-edged sword.
Before we wrap, let's check in on Ethereum. We're running a stochastic relative strength index strategy on Ethereum Tether weekly. What's the pulse?
Ethereum is deep in oversold territory. StochRSI at 8.08, with both %K and %D lines rising from extreme lows. That suggests selling pressure is exhausted. However, average directional index shows weak trend strength, so any bounce might be corrective rather than a breakout.
So, cautious optimism on the altcoin front. Eli, as we head into tomorrow, what should traders and investors keep on their radar?
Watch Bitcoin's reaction at 83,860. A break below could test 78,000. For equities, NVIDIA's 181 support is key, and keep an eye on Fed messaging. Any hints of accelerated easing could reignite risk appetite across the board.
Thanks, Eli. That's it for today's update. Stay tuned for more market insights tomorrow. I'm Maya Keynes. See you then.